Thank you very much. It's good to be back here at Beaver Creek. It's been about 2 years since we last presented up here. In that time, I've lost a lot of hair, but luckily we've drilled out a lot of ounces. Just last week, we put out an initial preliminary economic assessment on a discovery we made just 4 years ago. At 570 gram per ton head grade, this is the highest head grade silver project in the world right now by a country mile, which leads to some of the lowest projected all-in cash costs as we look to move forward. A lot of forward-looking statements in this one. This is going to be meaningful production. It's got potential to be one of the largest silver mines in America. As I said, it's some of the lowest cash costs globally. So our project, Tonopah West, halfway between Las Vegas and Reno, one of the most famous discoveries in Nevada mining history. It's one of the reasons why Nevada to this day is known as the Silver State. In 4 years with the project, we've drilled out 100 million ounces of silver equivalent. Now, it's just silver and gold. That works out to about 47 million ounces of silver, 577,000 ounces of gold. Now, for the PEA, we've already established some really, really robust numbers. We've got a 2-to-1 NPV to CapEx. So we're looking at base case $1,900 gold and 23 silver. We're looking at $323 million after-tax NPV5. Now, this is going to be a big producer. It's going to be averaging about 8.6 million silver equivalent ounces per year over a mine life of just under 8 years. At cash costs of $11.96. Once again, one of the lowest all-in costs in the industry. IRR, just at the base case, is nearly 40%. Now, where the project really, really shines is on the upside. Given the grade, it's not all that sensitive to costs on the way down, but on the way up, we're highly levered. If we bring costs just a little closer to where they are today at $22.80 gold and $27.60 silver, you're looking at an IRR that's a 55% after tax, and the NPV escalates to just under $500 million. Now, there's a lot of room to grow this thing. In fact, from our resource, we actually orphaned about 12 million ounces from this PEA, which we're thinking is going to be a big pot of gold at the end of the rainbow, which we're drilling right now to link it up and bring on some new ounces. The head grade, as I said, at about 3.34 grams gold and 270 grams per ton silver, there's nothing like this at the industry. Our closest comp would be 50% less than this. So high grade, big production, and we're on private land in Nevada at that. So we're right next to a town, right off a highway, power for drilling, which we've got underway right now. We're hooking up to fire hydrants for our water. It's really one hell of a setup. We've got a heavy-duty drill program underway, our first in about 2 years, and we're starting off drilling into one of the highest grade structures in the industry, where we're looking to de-risk through our payback period and convert our inferred ounces to M&I. So the next few months should be quite fun, and now that we've got this palate cleanser out, so people can finally discover this deposit. So the queen of the silver camps, the king would have been the Comstock lode. This is much more silver rich than the Comstock was, though. It had about 30 good years, discovered in 1900, produced just under 200 million ounces of silver and about just under 2 million ounces of gold, but all that production came from 7.5 million tons. Means it's high grade, and the metallurgy there is phenomenal. So here's the metrics. 8.6 million ounces annual production. This would, if we were brought online today, be the second largest silver producer in America. That production broken down would be about 4 to 5 million ounces of silver annually and 54,000 ounces of gold. For the silver investors, if you're just looking for a free ride on silver, we're producing with the gold credit factored in at negative 22 cents for every silver ounce produced. As I said, the upside cases, things get a lot more interesting very, very quickly, and certainly lowest quartile for cash cost globally. So what is the price? Here it is. This is production and all-in cost projected against every major silver mine in the world right now. Given the grade profile we got a lot of wiggle room to make this thing work, but if it were to come online today, this would be the lowest cost silver mine in the world. And we're not in Mexico, we're not in Bolivia or Argentina. This is 3 hours drive from Vegas. So this is really the upside potential here. What we're really after right now on our drilling is backfilling some years of mine life on here. Probably we'll never have a better opportunity in the next 6 to 8 months to drill up more ounces more quickly and cheaply than we have right now. And in terms, before I used to say we're undervalued based off of our enterprise value ounce in the ground ratio. Now we're undervalued on a PNAV ratio too. We're trading at about 0.13. Next closest high-grade developers trading at 0.5. So we got a lot of room to run, and I think with our first big drill program in a couple of years into our structure, it's going to get exciting very quick. So this is Tonopah today. It's one of those very charming old mining historic boom towns, which we're looking to really show some new life. But this is what it looked like 100 years ago. We're picking up right where the historic miners left off, from horse and buggy, really. This is what we've got is a consolidation of the unmined, intact extension of the vein corridor, literally right from where they stopped mining at the onset of the Great Depression. We're the first group to come back in, and really it's that purple claim block. We're the first group to bring exploration to it since production shut down. We started drilling it. It was said to be where they stopped mining, 24-meter thick vein. Our first drill hole hit 30 meters of a kilogram per ton, silver equivalent. Since then, we've now drilled out about 4 kilometers of strike. So that 100 million ounces that we've got, that's in the red, those veins in the red. Now, what you'll see is to the northwest, it looks like we've got 3 deposits. We only included 2 of those in this resource. We excluded those 12 million ounces to the northwest from this mine plan simply because we've got 1 kilometer of strike along the vein corridor in the middle that's going to link it all up, and we got drills there right now. Just on that kilometer strike, we're thinking we can add another 30 to 40% in terms of ounces and unlock that 12 million ounces at the end of the rainbow there with that pot of gold. So what we're thinking is after this round of drilling, we're going to be able to bring on some serious ounces, going to add some significant mine life. Our CapEx ain't going to change all that much. We're looking at a 1,500 ton per day operation, and we're confident in that mill size. So what we're going to be doing is just blowing out the MPV, blowing out the IRR, and having some fun de-risking our early ounces as we go. So we've got a 50 drill hole, 20,000 meter program underway. The bulk of the drilling is going to be in the M&I conversion through the early years. We've got a 2.3 year payback period as it is, based on 1,900 gold and 23 silver. We're going to be drilling all of that out right now. We've had drills there since the end of July. Assays are working their way through the labs, and then you'll see we've got about 10 space drill holes that's poised to link up that kilometer or so of mineralization to the northwest, really blowing out the numbers for us. It's a very small footprint underground mine. This entire deposit is located on patented land, so it's not going to end up in permitting purgatory like a lot of projects do. There's no federal government involvement whatsoever in terms of what we're doing. 1,500 ton per day mill, all fits on private land. What we're thinking is with this drilling right now, everything right now is being done in pencil with respect to the site layout, because the center of gravity, we think, may move towards the northwest, and we'll see what we hit along the way. Maybe we'll hit some new really high-grade zones. Long hole stoping, 75% of the deposit, cut and fill, 25%, conventional underground mining methods. We've got a 3-stage grinding circuit. It's going to be a Merrill-Crowe. This is one of the only doré producers amongst the developers in the world right now. So this is going to be very straightforward. As I said, there's no lead or zinc. There's nothing else in our equivalents other than gold and silver. So, it's not just silver companies that would be after us. We've got a clear path to permit a mill and process plant on private land, and there's huge consolidation potential all around us. So we might be a hub, and there might be a lot of spokes, but this is a good head start. Now, as I said, we're undervalued based off of a PNAV now. Here's how we are on an ounce in the ground valuation. Once again, we're the highest grade story. We're the only high grade story that is pure play precious metals. And right now we're trading at about 1/3 to 1/4 the ounce in the ground valuation, despite higher grade, clear jurisdiction, straightforward permitting. And we're fully funded on this drilling. We got 20,000 meters underway. We've shown the economic potential of our ounces. At the grades we've got a lot of wiggle room to make this work. So with that, drills are turning. Some of the widest margin ounces in the industry and a clear path forward. So happy to take some questions.
Questions from the audience? Andrew, if I could ask, with regard to your drilling program, what do you expect? Are you able to drill this winter, or
We're drilling right now. You
Okay.
know, we drilled for about 2.5 years straight. We were one of the most active junior exploration companies in Nevada at the time. Something like 125, 150,000 meters we did in the span of about 2.5 years. We've taken the foot off the gas pedal last year to upgrade our resource. We 2.5x'd our last resource from our maiden. And this year we started with a scoping study, which led to the PEA. In June of this year, we got a call from Eric Sprott, who wanted to double up his position. He gave us 4.5 out of a $10 million bought deal, and that's allowed us to bring the drills back for our first heavy-duty drilling we've done. What I can say is that when we've been drilling in the past, we've always commanded really, really good ounce in the ground valuation. Last time we had drills there, we were $2.50 an ounce. Today we're 50 cents. We've de-risked the project substantially. The metallurgy on this is phenomenal. We had Kappas and Cassidy do our PEA on that side, and our model now is predictive. We're going to be adding a lot of ounces on this round and converting. I think the only thing that one could knock against the project as it is today is that our resource is entirely inferred, and the first 40 drill holes of this program are going to be drilling into our Bermuda vein. In the resource, it's the highest grade structure on the property. It's the first vein you're going to hit when you go underground. Silver equivalent is over 600. We think what you're going to be mining there one day will be closer to 1 kilo. So a lot of drilling into a high grade structure. And we're drilling near surface from beyond that resource envelope too. So what we'd look for is on success stepping up, we might be able to shorten that pre-production timeline even further on the next round. Yes?
Thank you very much. What was the CapEx projection in the PEA?
Yeah, so it's we've got $173 million in there. 22 million of that is contingency. Once again, the CapEx, we're not expecting to change too much. So every ounce we add here on in is going to blow out the mine life, blow out MPV, blow out IRR. Even at just the base case, which is one of the more conservative economic cases that have come recently in the industry, it's a 2-to-1 MPV to CapEx. So, we think with some success on the drills over the next 6 months or so, we'll be able to upgrade the resource next year and roll that into a new PEA, which is going to be absolute blowout.
Andrew, and you had mentioned that some of your tailings will be used as paste fill.
Yep.
I wonder if you could talk about your tailings strategy.
Yeah, so the majority of the project is going to be long hole stoping. We do have a dry stack tailings facility, but given the cut and fill aspect, which is a very small portion of it, we will look to, re-infiltrate that underground and put that in there. Other than that, it's not a high tonnage operation. I mean, this is the highest grade rock that's out there right now in the industry. So, it's going to be very straightforward from that sense.
Great. Thank you, Andrew.
Thank you very much. Cheers.